Catching pips is easy, but keeping them, that's where traders lose the game. In this video here, I'm gonna show you how to exit trades like a pro so you stop giving all those profits right back to the market. In educational videos such as this, maybe on YouTube or another platform, everybody always talks about entries, how to enter, the optimal entries, when to enter. But what if I told you it's the exits where most traders lose? See, traders will catch a great move, but then they hesitate, they overthink, and then boom, all that profit is gone. Today, I'm gonna walk you through how I manage my exits and preserve capital with a system that's simple, systematic, and backed by hundreds and hundreds of data points. Part of my core capital and profit preservation tactic is what I like to call a sliding stop loss system with non-negotiable rules. And it goes like this: as soon as I'm in 30 pips of profit on any given entry, and I'm not gonna go into esoteric nomenclature and define what pips is. Sitting here right now, I recommend that you go to ChatGPT and say, hey, ChatGPT, what is a pip in regards to the Forex market? I wanna stay straight to the point here in this video. Once again, as soon as I get into 30 pips of profit on any given move, my stop loss moves to break even. And then from there, for every 30 pips of additional profit, my stop loss as well will slide up 30 pips. So once I get into 60 pips of profit, my stop loss is now at 30 pips. Once I get to 90 pips in profit, my stop loss is now at 60 pips of profit, and so on and so forth. What this allows me to do is lock in partial profit as price moves in my desired direction. It allows me to stay in the trade while managing my risk dynamically. And finally, and I'm gonna get to this point a little bit later in the video, it eliminates emotional decision making. This tactic is much more of a discipline exercise than a prediction exercise, if that makes sense. And to supplement the sliding stop loss system, there are two key technical conditions that will make me tighten my sliding stop or even take my profit outright from the market. The first technical condition is aggressive fills of areas of inefficient price in the market. Again, if you don't understand what that means, double tap the left side of your screen or the left arrow to go back 30 seconds to when I said the sentence that I just said, and type in, hey, ChatGPT, what is an aggressive fill of areas of inefficiency in the Forex market? And it'll break that down really well for you. But if price fills one of these inefficient areas, particularly very quickly, I immediately go on alert. The lights are flashing in my head. Why? Because that rapid price move often signals imbalance in momentum. And this is a big reason why we use the MACD indicator in TradingView. And once that inefficiency is filled, there is a very, very high probability. Again, I know this from the data points that I've collected and the back testing that I've done. There's a very high probability of stall, consolidation, or complete rejection of that area. So in those moments, I will tighten my stop loss aggressively as well. And oftentimes to lock in the majority profit on that move at any given time. I really don't like the odds of price just blasting through these areas of inefficiency. Now, the second key technical condition that I watch out for in terms of my exits is when price is approaching major support and resistance levels. And these are levels in which we call here at Bloom decision-making levels. And that name should make sense, right? We're making a decision at that level. And it's the same idea here. When price reaches a very well-established key level, I never trust or assume that price is just gonna blast through that decision-making level. Because like I mentioned with the areas of inefficiency, price will often, when it approaches decision-making levels, stall, consolidate, or completely reject that area. So I adjust. I don't play hero. I don't put on my cape, think I'm the Superman of trading, and I know everything, and I'm gonna predict that price will blast through this strong. No, nothing like that. We got to be more systematic than that. Whether it's inefficiencies or key levels, these zones are where smart money makes decisions. Once again, decision-making levels. And if you want to be consistent, if I want to be consistent, we have to do the same. The goal isn't to guess perfectly. It's impossible. We're going to take losses. we're gonna guess wrong sometimes. But this 3-part capital and profit preservation system reduces our exposure when the probability of continuation drops significantly. And then here's the part that most traders miss when it comes to implementing a system that is laid out and articulated upon. My system works for me because I have tested it. What works for me might not work for you, and that's okay. That's what's beautiful about this game. Whatever method you use, these are the 3 most important takeaways from this video in optimizing your exits in capital and profit preservation tactics. You need rules, you need repetition, and you need the data. Backtest your exits. Build confidence in the system that you lay out. Track it, refine it, and then rinse and repeat. And you may ask me, what's the goal in doing all of this? And I'll tell you that the end goal and the reason why you should implement a profit and capital preservation system is so that you can stop relying on emotions and finally start relying on process and system. If exits are something that you struggle with, drop a comment below. Let me know what your biggest challenges and pain points are when it comes to your exits and holding on to the profit that you take from the market. And if you want to test the sliding stop loss system that I implement myself, every Tuesday morning at 6 a.m. Mountain Standard Time, Marcus and I are live in our Circle community, demonstrating all the tactics and systems that we implement in our trading in a live trading session in which you are welcome to come join in on conversation, ask supplementary questions, and enhance your trading skill. Regardless of the system you implement, start in sim, start in the demo, log every move, and steady the results. And I'll leave you with this, guys. Capital preservation is not optional. It is the key to longevity. I hope to see you guys in one of our trading sessions and wish you the best of luck in your trading journey. I'll see you in the next video.